Hello, hello, good evening. Happy Tuesday. Happy Wednesday to you, Sandy. Got the time zone thing down now. And then whenever you change, there'll be another adjustment. Don't you change in like 2 more weeks or something like that? Hey, Perry, good to see you. We're going to give it a minute or two. I should probably go put this link in. Give me a second. I'm going to copy the link. No, no, no. Yeah. It's just always a funny shift how like we're misaligned by 2 weeks, you know? Um, okay, for anyone trying to join tonight, it's light today. That's why I'm wondering, like, we are live now. Okay, we'll give it one more minute. Hi, Perry. Good to see you. And then we'll go from there. Interesting day in the market. Uh, Slightly disappointing inflation numbers, and yet the market still bullish response. Again, we're not surprised. I'm not surprised ever by any bullish response right now. That's what I'm expecting. More bullish responses. I'm not waiting for the data and like, oh, is it going to be good or bad? I'm going to just trade because I'm bullish. And if something turns out bad, then I'll adjust. Lots of green lights, indeed. We got a few to go through tonight to play with, some trades. So yeah, let's jump in. Welcome to the Market Watch Group Options Foundations. I should put it in the slide 2.0. 2.0. We may stick with 2.0 for another round before we make another adjustment, and then we'll keep naming it as we go. Basic option strategies. Today is application day. I am Scott. I will be your host. Whoops. That's not what I wanted. Nope. Basic. No, sorry. That's what I wanted. Disclaimers. Education and illustrative purposes only. We are not brokers. We are not advisors. We do not provide recommendations nor guidance. Those are the rules. Apparently, there was an issue and a reset. My understanding is we are a day or two away from having SMS where our full new service will come out. Very excited. We'll remind you of that once the alerts are coming. What are we doing today? Quick review on basic options strategies. Essentially, buying calls, buying puts, and what our thought process is, what information do we need to get from the chart in order to go into an option pricing model and build ourselves a trade. Um, was the link in the original email the new? It should be. I thought I had updated it. Is it not? Did you try and you didn't get in with that? Uh, well, shoot. Um, I'll have to take a look and see. I hope that's not the case. You saw it on Discord but couldn't get in. Oy. Yeah, I thought I had put the new link in were you going from the previous email or were you going from the site? When you were trying before, did you try from like the links page on the Google Doc or were you trying from like an email to get into the next one? The new email. Will the alerts be only on SMS? No. SMS, email, Discord. All three. Because we're cool like that. Obviously. So, yes, we will. Now, keep in mind that the text is just simply the first two lines of the email plus a link. So those two are tied. And then I'm basically just copying and pasting the message and putting it in Discord. Bada boom, bada bing, all three at once. Very exciting. Basic option strategies review application. Anybody who's listening to the recording who could not get in because you had a bad link. Number one, this is the link for the Thursday night sessions, but it's Tuesday night. Did I put the Thursday night or the Tuesday night? This is the, no, that's okay. I'm still thinking I might have put the wrong link in somewhere. So I'll redouble up my efforts. So if anyone missed and they're listening to the recording, of course, my apologies. And I will try to get that all situated. And again, I'm really moving towards, I'm looking at the ability of eliminating Zoom altogether and just trying to broadcast and do everything through Discord live, YouTube repeat. I don't know if I'm going to be able to, as long as I have some ability to control. Anyway, we'll see. Fingers crossed. Let's get into it. Buying calls. What are we looking for? This is where we are now. I could even put in a bullish market posture, but it doesn't have to be. You might buy calls with a bearish market posture. If you're a -6 and then all of a sudden over a 3-week period, it goes to a -3, you might be like, that was what I was looking for. And I'm starting to trade bullishly. We are not waiting for a bullish market to trade bullishly. That's madness. That's missing so much before. There's so much momentum that you can trade as it, goes through the process of convincing us. So we don't have to be bullish with posture. We do have to be bullish with trading posture. So if your trading posture is being informed by the fact that you've gone from a -6 to a -3, that makes sense. And you're like, yeah, I'm short-term bullish because of that. Great. Now what? Now what are we looking for? We're looking for bullish stock leading sector. Where is the money going? Bullish stock leading sector. What does that mean right now? Well, that's our watch list. It's full of that exact definition. We look to search the sectors that we identify as being in the top in our sector rotation. We look for stocks that are above the 200, above the 50, which means they're uptrending, high volume. This is our watch list criteria and our initial filtering mechanism. We want plenty of open interest with tight spreads. Over 2 million shares is how we do that. We still like to keep an eye on the options. We want to have a system that is creating this trade. Bounce, continuation, breakout. Right now, we're looking mostly at bounces and continuations. So is it bouncing off of support? Has it recently bounced off support and it looks like it's reaccelerating? You may not be catching the initial bounce, but you feel like there's plenty of upside momentum still. Bounce continuation. Not really looking for breakouts. There's plenty of bullish things right now. Now, as we're looking to buy a call, what are we thinking about here? We're analyzing for price, time, and volatility. Price. What is that going to do for us? Good evening, Bob. Good to see you. Glad you could make it. Price is going to help us establish a stop price and a target price. And when I run the calculations out and put it together, it will also provide me a reward to risk ratio, target to stop, reward to risk ratio. So I'm analyzing for price. I need to, based on where I'm saying, hey, here's where I'm thinking of getting in. So if you're getting in at that point, if you're right to the upside, how high is it going to go? There's your target. Now you can calculate your reward level, where you're going to put your stop. There's your risk. Put them together for the ratio. Question came in, what would I consider a tight spread? So as a general rule of thumb, the zone of like, oh, as long as it's under this, I'm good. I would say 10%. So if the quote, and we'll look at this when we go in and look at a specific example, Sandy, so don't let me forget. But if the quote of an option somewhere around $2.50, I wouldn't want the spread to be any more than 25. So it might be $2 bid, 225. No, let's see. 225, 250 bid, 275 ask. That's 25-cent spread on about a $2.50 option. That's the most. Now, my preference is 10 cents or less, ideal. If you're trading on the SPY, you'll see spreads that are only 3 cents. Because remember, it's times 100, so 3 cents is $3. That's what I'm paying a market maker, $3. That's fine. That's pretty reasonable. If it's 20 cents, it's $20 a contract. So if you're doing 4 contracts, 5 contracts, that's $100. If you remember the days of commissions, when we would all bitch and moan about commissions, I mean, commissions would only be like 15, 20 bucks. People would bitch and moan about commissions and not even pay attention to spreads. So they're like, oh, I paid $18. Meanwhile, they've traded something that had a 40-cent spread. That's 40 a contract, 5 contracts. That's $200 that they just paid to a market maker. Now he pockets that, and you're not getting out of that unless it moves far enough to overcome that and then some. And then when you get out, it's the same market maker, and it's still illiquid. He's going to make it just as hard. That's really hard to make money because he's making all the money, right? That's the reason why is that liquidity, that competition. So my preference is right 10% max. The cheaper the better, 10 cents or less. Ideal. We've analyzed for price. That's just the up and down looking at price movement. Now what? We need to analyze for time. How long is it going to take? How long is it going to take if I'm right? Obviously, that's going to take a little longer. What if I'm wrong? A lot of times I'm giving it maybe 3 to 5 days, right? Maybe 3 to 5 days, where if it hasn't started moving, I'm getting nervous. So if I'm going to look at how much am I going to lose in time decay, because that's what we're trying to understand. How much am I going to lose in time decay as I'm waiting for this thing to go up or down? We need to make sure that we factor that into our risk assessment. How much am I going to lose if it takes the full amount? So that might be 8 days, 10 days, a little longer. If you're right, you're less concerned, but you still want to know. So we're planning for price, we're planning for time, and we're planning for volatility, buyer or seller. What does that mean? That means that, am I looking to enter this trade as a buyer because implied volatility is low and options are cheap? Which is where we find ourselves primarily now with the VIX as low. The VIX is a great broad representation. A VIX under 18 is generally cheap. A VIX under 15 is real cheap, and we are under 15. So the options aren't expensive right now. I'm definitely preferring to be a buyer. If I see the VIX at 30, I'm going to be like, oof, I got to sell it. Got to spread trade something. Price, time, and volatility. We need to make sure that we're able to come away from this with a reward to risk ratio to make sure that it meets the rules, and a position size where we say, okay, if this trade is a yes, here's how many I'm going to buy. so that I'm like, all right, I'm getting in. I set my stop. If it hits my stop, I'm going to keep my risk at or below the position sizing amount. That's it. That's the buying calls way. Buying puts, the exact opposite. First, what would we need to be? Bearish, or at least have some level of a bearish trading posture. We'd be looking for bearish stocks and lagging sectors. It's not really a lot of bearish stocks and lagging sectors. Everything's going up, tide's up, all boats are up. Why would we want to put ourselves through something like this where it might go down for a day or two and then rocket the other way? If you do some puts, it might be here or there, but just be very, very careful with that. Same thing, plenty of open interest, tight spreads, same thing, bounce, continuation, breakout. It's exactly the same thing in opposite. That's it. The only question to start this with is who's in control, buyers or sellers? Okay. Whoops. Thought I had an application. Okay. Anyways, let's go to the charts. Let's go to the platform. Let's just get in. I'll tell you right here. Here's one I'm looking at. Ross Stores. Right? Nice pullback. Question on puts. Put it out there, my friend. You know, open door. This is a open forum. Put the question in as it comes. I'll get to it. This is definitely one I'm thinking about here. I think you can see the stochastics is turned and pinched. This is looking basically viable. But let's go through. Let's go through. Apple hasn't done enough yet. That's tough. I think it already gave the signal, back. These are the ones we said, hey, if these flags start breaking, those are entries. That's your entry right down here, ideally, on something like that. AMD. Oh, look at AMD. AMD has a nice zone of potential entry up in here to confirm that hammer tomorrow, potentially. Right. Now you can see sometimes it goes up, comes back down, and sometimes it just keeps going up. We don't know. We just know that's bullish. We know there's momentum. Certainly a potential in AMD. I'm gonna kind of star the ones that I like, that we like. Tell me if you're trading these. Tell me if you like one more than the other, and let's see if we can't get an example or two constructed. Heiken Ashi on this one. Heiken Ashi. Let's see. I would say not yet. I'd say probably 2 days away. I would say 2 days away, right? Where you might have one more day and then it turns. You could certainly be patient and wait for this to become a continuation trade, of course. Right now, we're looking at it more as a bounce trade because we think this thing is just starting to find this support level to bounce off of. Heiken Ashi is a confirmation. It's going to characterize it more as a continuation trade. Amazon, I'd say Amazon still looks like it could be viable. And I might say Heiken Ashi would make sense. That would be next. So I'd say that's on the table. AXP is probably on the table. And that's why right there that we never get suckered into like, oh, there's one big buying day. Bam, sellers again. Smashed it even lower down. Okay, fair enough. Ooh, look at BLDR, so fast. BX sideways. City could be soon. Caterpillar could be soon. Look at Costco coming back already. CrowdStrike could be soon. I'm going to put Crowd on my list. Ford. Oh, look at Ford looking viable here. Most of my puts are STO. Sell to open. So you're selling naked puts, cash secured puts. Where I keep the premium if the stock's out of the money. If it gets close to the strike, buy to close to reserve premium. Boeing hit my buy price, waiting for it to set. Okay, yeah. So and if it gets put to you, you could always just turn around and immediately sell at the money covered call, right? So that it gets you another chunk of premium because that reduces your So whatever your strike price is, and this is what we're going to get into next week in more detail, strike price minus your sell to open put premium. And then if you were to do a call, you could subtract that. And you're just basically like, if it ever gets put to you, you try to work your way out of it. But ideally in an uptrending market, you're not expecting things to gap down against you. But yeah, certainly reasonable. What's the downside right now? Well, the downside right now is implied volatility is low, which means premiums, if we're like, hey, those are pretty cheap, as a seller, you don't love cheap premiums. We'd rather get a fatter chunk. Ford looks reasonable for a trade here. Fastenal soon, but maybe not quite. Look at Bitcoin. Just rallying higher. Son of a gun. Hard to find good premiums is right. I'd say GE is kind of setting up, but gold pulling back. Google, we like to see Google running. We'd like to see a little more. That might be enough. It's kind of given that V. I'd like it to get a little higher, just crack above that 50 a little. We'll see. Home Depot. Oh, look at Home Depot. Absolutely. AMD's, we got a couple in technology, AMD and Crowd. We've got Ford and Home Depot. Consumer discretionary, we've got IBM was kind of fast there, wasn't it? Woo! Intel. IWM, I think, looks like a reasonable setup for small caps. What are you guys in? What are you trading? Are you trading? Do you like it? Meta, maybe. Market been good. Netflix, maybe. Microsoft, look at Microsoft. Giving us 2.5% today. Let's go, Microsoft. Picard is very close. I would put Picard on my list. Industrials right there. I would say Ross Stores on the list. That's another consumer discretionary. SMCI is bouncing around. SPY up 1% today on let's see, 68.8 million. 68.8 times 1.05. 72,240,000. And today we had 73. Oh, that's above 5%. That's a notch back up. Right? That has us possibly thinking about raising posture. So there you go. TPR. I would say TPR looks good. That's another. So you can see where we're at. Retail / consumer discretionary. Some technology. Industrials, maybe. UNP looks pretty good. There's one. No. Waste management starting to kind of grind forward. Yeah. Net, Para, and M. Net. Para, Net. Cloudflare. Okay. It looks like it's holding up. Buyers are still waiting for those buyers to really start to smash in a little bit. Para. P-A-R-A. What time are we at here? Yeah, we'll go build a couple of trades now. I've got 1, 2, 3, 4, 5, 6, 7, 8. I got 9 starred. Wow. 2, 4, 6, 8, 9. Paramount. Oh, okay. It definitely broke out. You know, my stance on things that have been going down. You can see the consolidations pretty clear. And then we got what? Bam, the buyers. Anything I'd say at or above like this area. So if it came back, might have to wait a little bit, but on the 6th, okay, yeah, that's pretty early. Trying to catch that low. Nice. Very nice. Okay. All right, let's see here. Let's do 1 and 1. So let's do either let's see, we've got a few things to look at here. AMD crowd. AMD, Ross Stores, those are good. Those are good ones. This one doesn't necessarily confirmed where I would say Ross Stores has a bit more like confirmation per se, right? Let's see. Where that stochastic's already starting to turn a little bit more. Let's just play with this as an example. Okay. I'm going to duplicate that. I'm going to put that right there. I sometimes give it a little bit more, so I might just say like 153 just to kind of put it at a round number. So I'm already starting to think about price. So this trade, we're saying, what are we looking for here? Well, I'm not looking for the option yet. Now you'll notice we had implied volatility drop substantially after earnings. And we're all the way back down here now. Options look cheap. Okay. Target would be up around 153. What about a stop? I would be pretty comfortable with a stop not far below this low. That's 144.30. Let me see here. We've got about 5.5. The low is 144.30. Yeah, I might go just below that. 144.25. Okay, so now as we're thinking about this, remember what we're constructing here. And the way we're going to keep this organized is we're going to go to the model. And we're going to put in ROST. And we're going to add a simulated trade. Now you can see here, I've got 3 days, 10 days, 16. I'm wanting to go at least to here, but I'll probably go even further out to the 38 days. Why? Because this is where I'm going to have the most open interest. Let me show you. All right. If it's a chance between this one and there, look at the open interest. It's just, this one's right on the edge of what's acceptable. I wouldn't want to trade here. I would want to keep my trade in the standard because that's where I have enough contracts. What's a good spread? So here's the rule of thumb. Nope, I don't want that. This is the first out of the money option, the 150, right? We're at 146.49. I'm going to go to 150. That's $2.10. What is 10% of that? 20 cents. So I would want this to be between 190 and 210, and it's 195 by 210. So here I've achieved my objective of less than 10%. I didn't achieve my objective of single digits, but there you go. So now what am I going to do? I'm going to put this is the option I'm going to use as my example. So I clicked on the ask price to put it down here to say, hey, what if I bought this option? By default, it has 10 contracts. I'm just going to dial it back to 1. And you can actually go in. I forgot how to do it. You can go in and set your default up in settings, I think. But for now, we're going to say 1 option. Now, what are we going to do? I'm going to use these slices. These slices are my connection to the option pricing model. So the option pricing model is using this. It's using the time to expiration based on the expiration dates. It's using the implied volatility, and it's running this Bjerksen-Stensland model so that I can say, what happens if this goes up to my target, 153? And I've locked it in. I can say, what if it goes down to my stop loss at 140, 425, and I lock it in, right? I lock it in. Now, you look at this and you say, wow, I'm risking 60 to make 360. That's 6 to 1. It's not. A couple of things. Number one, my date's not even right now. Today is the 12th. So even there, you'll notice it's now $80 to $340. This reward to risk will change quickly as we move this date. When I'm buying an option, buying a call or buying a put, what is some of the information that I want to know? How much am I going to lose in time decay as I hold the trade? That is reflected by theta, which is here. I'm losing about $5 a day. But what I'm doing is I'm actually building this using this date. I'm going to say, you know what? If I'm wrong, I'm going to know it by maybe we could say by Friday, but let's give it a week just to be safe. So I'm going to come here and I'm going to go to the 19th. Now you'll notice that this is worst case scenario in what we have just set up. Worst case scenario is that now if it gets to 144.25, you're wrong. If it gets there sooner than this, you're going to lose less money. This is the worst case scenario. And in this case, you're losing about $100. $100. That's stopping out at 144.25 in a week. $100. What is my gain? 307. What have I done? I've achieved a 3-to-1 reward to risk ratio. There it is, right there. 3-to-1. Bam. Check. Okay. So we wanted to come here with a sense of, where am I right? 153. Where am I wrong? 144.25. How long is it going to take? 1 week if I'm wrong. Week and a half if I'm right. We'll give it the rest of the week. At that point, if you're right, you're going to get the vast majority of that. But what we've done is we've accounted for time in our risk assessment now. So now we can say, okay, I have a $20,000 account and I'm willing to risk 2%. That's 400, right? 20 grand, 2%, that's 400. So what would I do? I would come down here, boom, boom. I'd buy 4 contracts. Now my risk is 409. My reward is 1,200. If I only wanted to risk 1%, that's $200. I could get 2 contracts. Now 2 contracts is harder to manage. 1 contract even more than that. So, think about like how you go about this, but this would be the thought process of my trade. I don't care that it expires April 19th. I'm not going to be in this trade past probably April 22nd. Maybe it leaks into the first couple of days the following week, but unlikely. Right? So what we've done is we've accounted for time during that period. The price is 210. Yes. I have $2.10 per contract, but it controls 100 shares. So I move the decimal out of the equation, and that is my per contract price, $210. I'm risking about half, right? I'm risking about half of this. Now, if I'm right, I'm going to get, a nice gain. I'm going to make a pretty good amount of money to the upside. Now you can see here, this is my reward to risk profile. So simple to use it is, right? I mean, once you have it, once you are like, oh, I see it is. So this is now representative of my trade. This is where we are now. You might think, why are we underwater? We're underwater because we're looking a week out in time. If I put this back to today, we're right here at the beginning. So we're saying, what if it's actually tomorrow? But if we're going out here, that's our break even. That's how much we lose. That's how much we gain. I have a 3-to-1. I have my position size. That's my trade. That's my trade. Right? And then I could come in here. So let's do 3. We'll say it was right down the middle, 3 contracts. This would allow you to sell 1, keep 2. If there was a point where you're like, hey, I'm gonna take a little profit, maybe halfway up here around this 150 mark. That's a nice round number. Maybe even a little higher. I might even try to, if I was me, I'd try to push it for like this 150.75-ish, right somewhere through here. And you can see that. You can say, oh, okay, if I were to do that right through here, you have a nice little gain right there. You've got about $500. So if you took 1 contract, you would lock a gain of about 160. And then you would carry the rest for a chance to make $600. And the whole trade makes a nice $760 gain. Never had more than 300 at risk, worst case scenario. And if things go wrong, our objective is to lose somewhere around 150 to 200. So if our average loss is 150 to 200 and we're booking some $500, $600 gains on average, now we have a winning system. Yeah, price is 210. 4 contracts would be about $840, and that would be about 4 contracts of risk. So you can see here, if I were to confirm and send this, you can see cost of trade $840 plus a little commission. $842 is my total cost. Okay. The risk is about 409. The potential for gain 1200. So the overall reward to risk ratio is there. That's the position. That's the trade. And then we manage it, and we make adjustments, and we ease pressure as we can, and that's things go wrong and you break even. Things go wrong, you lose half. Things go right, you make it. There it is. So Ross Stores. Let's do another one. Let's do one more of these as an application. Thoughts on this format so that going forward we do the same thing. On Thursday, we're going to talk about the theory of selling options. We'll look at the slides. We'll look at the dynamics and the terminology. And then on Tuesday, we will put it into application and say, this is how I would do it. It will give you some great paper trading to really cement some concepts if you can integrate them. Let me know your thoughts. Okay, let's keep going. Let's keep going. What's another one we said? PPR, UNP. So we could do a UNP or PCAR are industrial. Let's see if we like either one of those. Market's on or closed, either one, doesn't matter, live or not, absolutely. So like, for example, if you have access to this or a model like this, and an alert comes out half hour before market, which is 15 minutes before we would meet, and give you time to go in and say, okay, here's the stop, here's the target, here's the entry. Like, what's the, how does this look? What's the range look like? So, okay. Where was I? UNP. UNP. I would say that's our last sort of move. So we could play with this. I would put my stop just below this low. So we'll call it 247.15. Okay. We're going to UNP. So we would say 247.15. And the upside of that, nope. The upside of that was up here at 262.50. Yeah, that sounds reasonable. We would need it out here to the 21st if we were right. Right? If we were right. Wrong, I would definitely still say we'll know by the 19th, a week from now. Yeah, definitely. 262.50 then is our upside. And we have 247.15 on the downside. I'm going to go probably to the same place. Again, you can see that I just don't have a lot of open. They have weeklies, but there's, and there might be more interest over here, but not a lot still, right? I'm not interested in dozens. I'm interested in hundreds, and if not even thousands like we have here. So let's find out of the money. That's this one. These are pretty expensive. You can see 540. What's the spread? 30 cents on a 540 option. Definitely less than 10%, but it's not a cheap spread, right? It's definitely less than 10%, but it's not a cheap spread. Let's just play with that. You can see this is going to be way more expensive. If I dial this back to one option as a standard unit, before our risk was $100, now it's $225. So if I was doing 400 in risk, I'd probably do 2 contracts. If I was doing 200, I might only do 1. Or I could do this. I could say, well, what if I do this one? What if I go out of the money? And I go back down here, and you can see now I'm at 165. So maybe it would help a little bit, not a ton, but if I'm trying to get to 300 in risk, I would probably do that. 260 calls. I would do 2 contracts, 328 risk, 897 gain. Not quite 3-1, but very, very close. It is still, it's very low, but it's pretty low. Options are fairly cheap. So this would be my thought process. Where would there be a take profit opportunity? Probably somewhere around 258, 25, 258, 40. So if you look at what this trade would look like, that's Again, a nice little, right? You have a nice take profit zone there. Now, if I only had 2 contracts, I'd be taking about 225, 250 all at once, and then hopefully making another couple hundred on the second contract. Or you could push it a little longer. I mean, anything we want to do with this is up to us, but this is the trade. Let me make this bigger so we can see it. So there's the stop, there's the entry, there's the target. Yeah, we're looking for a positive reward to risk ratio. What do I have? I have my, what if I'm right, target price. What if I'm wrong, stop price. I've adjusted my time to account for time decay 1 week out. If it goes longer than that, it's only because I'm right and I'm making money. I know my reward to risk ratio. I know my risk per option so that I can then create the exact number of contracts to control the position size. It's a lot of work to have done in advance. We already have an idea of a level where we would take some profit potentially and ease the trade. Love this, right? This is to me the only way you can viably buy options successfully over time. Is to have this type of a methodical approach. You always know your reward to risk. You're always in control of your risk. You only take trades that are favorable, 2.5, 3 to 1. You can see we had 2 3 to 1s. It's a bull market. We should expect to find 3 to 1s. Right? That's why it's part of what our posture tells us. At this point, all I got to do is implement the trade, right? Put the trade on. I can say I only want to do it if I get it at this price or better. I could even go a little lower. Here's the thing. Whenever we're getting into trades, we get FOMO, like, oh, I want to get in before it goes without me. But how many times does it leave right as you get in and take off for glory versus how many times you get in and you watch it pull back 5%, 10%? So, right? If we're, you learned how to change the colors, right? Buys and sells. Buys and sells. If you're buying it, it's green. If you're selling it, it's pink. But yeah, so this gives us the ability to quantify and understand exactly what it is that we're doing. So yeah, you might say, hey, you know what? I like this trade, but I'm going to do it only if I can get it for 325. Oh, the chart above. Oh, yeah. Okay. In the settings. Very cool. Oh, I love these charts. Magical charts. So let's, what was I just doing there? Now I was sorry. I was trying to demonstrate something else, but I forgot what I was going to do with it. You can change the colors. You can change a lot of different things. You can move this chart from here and drag it around. You can move the chart itself. You can resize it. There was one other thing I wanted to show. What was it? I'm blanking. Why only set the date out a week? That's how long I need to be wrong. Right? If a week from now I'm still in the trade, that means either A, I'm already starting to tighten my stop because it's going right and I'm trailing it, or B, I'm getting basically like ultimatum stop. I'm going to put a real tight stop to either stay with it or get out. But this isn't a trade that we expect to diddle around, right? We're looking to trade the momentum. So I'm looking for this thing to move basically pretty quickly here. That's why we're waiting to catch that move. If there's ever a time when you're thinking, no, I'm going to wait a little longer, or I want to be spreads, anything that's longer than like 1 week for being wrong. So the dates change for both simultaneously with this. And if we were to go further, then we would just have to say, oh, 3 more days. What happens? But that gives me the reward to risk. That's it. Buying options. What are you doing? You're looking to speculate The this up here, I don't change the dates. This is just a probability slice, and I don't really do much with that. So like you can see when you go out here to 319, this is your probability. Yeah, I don't even know what it's doing right now, to be fair. That has to do with probability, and it puts this little zone. So what it's saying is there's a 42% chance that it's in these different zones. I don't play with that much. Any other questions? If you don't have Thinkorswim, find a model. If you want to trade options and you have access to Thinkorswim, definitely get access to Thinkorswim. I know, Sandy, I'm sad that they don't have it there. I would think Schwab's big enough that they would think about it or want to, but who knows? Okay, lovely stuff. Tomorrow morning, market as usual. Thursday night, we are talking about selling options. So we've gone through the buying options. That's your basics. Then we're going to switch gears, change perspectives, talk about it from sellers. So I hope you can join me for that. I will try to make sure the links are in multiple places for you to join. Have a wonderful rest of your night. It's good to see everybody. And as always, happy trading.